All right, let's talk about last week. The job market came out and we saw the job market soften. What happened with rates as of last week?
Yeah, actually, it went down. It went down to seven. I think the average rate is about 7.08 at this moment. So it came down from 7.375 to 7.08. So that's a good sign.
Oh,
So
wow.
Feds love a soft job market report. So definitely helped out the rates.
So interesting because you would think that a softer job market would have the opposite impact, but
Yeah.
it
Yeah, usually
didn't.
for mortgages, when it comes to bad news like that, it actually helps the interest rate, lower the interest rate. So that's what it does. It does the total opposite, like you said.
Perfect. Got it. Thank you. And, we've talked about a lot of buy downs and, rate instances that,
Mhm.
buyers can work through in today's market. Given that we saw a little bit of softness with rate, what other trends are you seeing with mortgages right now?
Yeah, it's a great question. So we've been doing a lot of what's called non-QM, which stands for non-qualified mortgage products. So I would say there's always three tiers in financing for mortgages. So you got your typical Fannie Mae, Freddie Mac, which is conventional FHA, VA. And then the second tier is non-QM, which stands for non-qualified mortgage products. So they don't go off of Fannie Mae, Freddie Mac's guidelines. So it's a lot more lenient where they don't need tax returns, right? For example. And then you have, the third tier, which is hard money, which is kind of like your fix and flip or properties that just can't qualify or clients that just can't qualify for the financing and they have a hefty down payment. So the non-QM has been very trending right now. I would say half of my pipeline is probably non-QM loans, which means that for self-employed borrowers, those are the perfect candidate. I'm working one with an attorney right now. He just graduated law school probably about a year ago, and he's been self-employed, for a year. So 2 years ago, my apologies. So again, with that time frame, not a lot of lenders will let him use, 1 year tax returns as self-employed. So we're doing a bank statement loan, a portfolio of 12-month bank statement loans that will qualify him, for his purchase price that he's looking for. So with the down payment requirement, it ranges anywhere from 10% to 20% down. I would say that's the norm. And right now, to be honest, the interest rate is pretty similar. It's not a huge difference compared to what we're seeing in the market at 7%. You might see it at 7.625, 7.75. Again, it is a little higher, but you're getting a financing that you couldn't obtain prior.
Wow. Okay. And with those types of mortgages, are you still able to do a buy down if you wanted to?
Yeah, definitely. That's a great question. So if you're able to obtain a seller credit, or else if they have the extra funds to buy down the interest rate, they can definitely buy it down. So, and this program is for primary residence, vacation homes, and investments. So a lot of different creative options when it comes to that.
Well, that's really good to know because a lot of people we saw the big trend, in 2020 when a lot of people were laid off with COVID is
Yeah,
a lot of those people went and started their own business and
exactly. Yeah.
now they need a product and not all lenders have this type of product, right?
Correct. Yeah, you won't find it at your typical big banks, right? So, again, we're very fortunate. We have some good relationship with these non-QM lenders, and we know how to structure these loans. So it's actually a very simple loan to qualify for.
Perfect. Okay, great news. Well, thank you, Tyler. So, if you guys are looking for a self employed loan, if you're looking to buy primary residence, reach out to Tyler or myself with any questions. And we hope you have